All right, I'm back from Peru, and I have a lot of work to do on making a video talking about Peru and how it was traveling there, and tips and tricks and advice on just being there, and also on travel trading. Um, also, so the course is being worked on, so plenty of work for me to do today. I'm just going to do a little trade review here and kind of get back into the swing of things. Today had a small gap up and kind of had a few sideways bars in the open. Now, what I liked about the open on today is that it stayed above the moving average. So whenever I see the moving average holding, I like to see that because it means that the day is respecting the moving average, and you can usually expect it to continue to respect it. So as I look at like this double bottom here, this double bottom is occurring at the moving average, and so it's the moving average is holding it, and then it tends to also work later in the day. Like you can see, it got below it here and worked, and then also held again here. This is the 2 o'clock, and we had the FOMC announcement at 2 o'clock. And so then obviously the market had its increase in volatility there and nullified the moving average there, but it did continue to hold. You can see it got above and then tested it there, got above and tested it again here. So I like seeing these early signs in the moving average because it tends to continue to work if it's working on the open. First trade I'm going to mark is a short here below this bear bar. There's a little bit of a trading range in the first few bars: bear bar, bull bar, bear bar, bull bar, 4 overlapping bars. None of them really breaking out of this little range we had. And that increases the chances that we're going to have more of this later. So as we've gotten a bit away from the open, then you can see we also have a small double top here. And more importantly, there's a wedge. So I would draw the wedge like this. First push, pull back, second push. Then we have a third push here that did not go above the second push, but that's okay. That's still a wedge. So it's a wedge double top on the open, and we're far away from the moving average. So it'd be reasonable to think that the market's going to pull back a little bit to test the moving average. My timer's going off. All right, so it's a wedge on the open, which is a reversal pattern, and we have room to the moving average. So I like the idea of trying to be reasonable to take a swing trade here. There's plenty of room back to the moving average, and go ahead and draw on the 2 times your risk. So comes right back to the moving average. Would have gotten filled. Looks like a pretty good trade there. Another wedge that we have happening around the open is right here. First push, second push, third push at the moving average. The market did get below it and had a couple closes, but it really never broke through. And it never really stayed down below it. It came back up pretty quickly. So you have a wedge, and then a bull bar closing back above the moving average. And other ways to look at this is a 50% pullback. So off of this first leg, 50% pullback and bull bar. Also, you could look at it as a test of the open. So this pullback, it didn't come back to the open exactly, but it got close. And to me, this might be the bulls front running with limit orders that were buying in here, betting that it wouldn't even get back to the open. So they were just buying, but then the bears would take profits, probably from their swing trade up here, so they were short, and they're taking profits down in this area. And then bulls are also buying, trying to front run the buy of this. So market didn't even get there. And for those reasons, I'll mark this as a buy here. So as the market is above the moving average and it pulls back, This one way, let me clean up my chart here. One way that I was looking at this was that we are in a larger bull trend here. We're in a larger bull move. But looking at these bear bars here, this is essentially just a bear trend. It's a short bear trend. So I can draw this trend line in here. The market broke the trend line here and then pulled back and tried to test the lows and the close of this bear trend. So when we're getting that, this is effectively acting as a major trend reversal. So trend line break, test of the low, and then the bulls look to buy again. So not only are we in a larger bull trend, but we're also getting this bullish pattern forming here. I'd also call it a double bottom. So double bottom at the moving average, getting a bullish pattern. So I like the idea of trying to take buys through here. Maybe not this first bull bar, but then when you get a second bull bar with that acts as this follow through, then I like trying to buy above that. And really, any of these bars would be okay, like buying this third bar or fourth bar. I think those are okay buys. I'd probably be taking these for a scalp, although swing trade is okay as well. Then we get 7 bull bars up, and that's good for the bulls, but it gets a little bit parabolic up here. So 7 bull bars. The last 2 bars are the biggest bull bars. Well, the last bar is the biggest bar in the whole move, and it's starting to get far from the moving average. So what this move could be is a second leg off of this first move. So first leg, pull back, second leg. And after you've gotten a second leg, then the bears, the bulls might be taking profits and kind of be taking a pause and waiting for the market to see what's next. I know in the back of my mind was we've had so much selling lately. So when I'm seeing 2 legs up like this, I'd be hesitant on trying to buy higher up here, especially after this 7th bar being the largest in the move. Then we get a double top. And I think after this double top, bulls would be looking to get out of their longs, at least momentarily. Another way to look at it is a wedge. So just like we had a wedge here on the open, we also have a wedge, first push, second push, then a third push. And once again, this third push does not go as high as the second push, and that's okay. And when we see this wedge pattern, means bulls are looking to basically pause on buying. They're wanting to see the bears attempt to go lower before the bulls step in again. They just want to see what the market's going to do. And if it becomes strongly bearish, then they'll just forget getting long up here. But if the bears fail to go lower, then they will enter again. In this case, the bears did not fail, at least here. The FOMC happened and they failed, but at least during here, the bears did not fail. The bears actually won. They got this double top here. So first attempt higher, then a second attempt higher. So I would call this a double top, even though they're not perfect. It's still 2 attempts up in the same area. And selling here because of that is reasonable. So we've had 2 bull legs up, still kind of in the first half of the day, so we might be making an attempt lower later in the day. Lower high double top. Bear close below the moving average with it's following 2 bull bars that failed. So bulls failed here and here, and if they're probably going to be exiting below a bear bar below the moving average, like down here. Especially one with so much room to the prior lows. So from this low down to this low, that's 13 points. So there's a lot of room to these prior lows and even more to the 200 moving average or to the open of the day. So I think it's reasonable for bears to be shorting here. I did not actually short here. I wanted this bar to either be a little bit smaller or for this bar to close more on its low. And also, what I was doing at this time, I was looking at the 2000 tick chart. So really, I was trying to enter this on the 2000 tick chart, and I'm going to pull it up. 1 o'clock. So this is what I was seeing on the 2000 tick chart. Right around this time. I didn't like how it's coming into the 200 moving average on the tick chart. So if I was shorting somewhere in here, I was basically going to be shorting right into this 200 moving average, and I didn't like that. So I decided not to take a short on the tick chart. And like I said, I also wanted this bar to be either a little bit smaller to have smaller risk, or close more on its low. And so I just didn't quite get the situation I wanted to be getting short in here. But I think the general idea of getting short here is okay. And even with the bar the way it formed, I don't see anything wrong with taking a short here. And either for a scalp, I think a scalp would be okay, or for a swing trade. And you can see, wouldn't have had much of an issue getting out 2 times your risk down here. That's also a great confluence with the 200 moving average and the open of the day. So if you're shorting up here, I think it's great to try to hold until it gets down here, because there's so many targets down here. You have the 200 moving average, you have the open. Those are 2 very important prices. The bulls are probably just going to hold off on buying until it actually gets there. And we can see it gets right there to that price, then shoots up. So bull stepped in right there, and it went up 13 points. Then we get into the FOMC at 2 o'clock, and I didn't really see any trades since then, unless you see that. Well, one way you could look at it, one way you could find some trades after this. First of all, you want to wait for about 15 minutes until after the FOMC to take a trade. I usually wait longer than that, but you want to at least wait 15 minutes. So that means these 3 bull bars here, that'd be 15 minutes. Then you can start looking for trades. Tried to reverse here, but got bought at the moving average. Then went up higher. Tried to go lower again, and then ended up failing. So once I'm starting to see this, I see the FOMC is clearly bullish. We're above the moving average. We're failing to go below the moving average. So somewhere in here, I want to be looking to try to get long. And I couldn't find an entry here on the 5-minute chart. But if you go down to a lower time frame, like a 1-minute chart or a tick chart, then you can look for bullish entries off of the moving average, or try to find double bottoms or wedge bottoms or something on the lower time frame. And then that's definitely that'd be a really good way to try to look to get long somewhere in here. So this is the daily chart. Bears will probably be able to maintain their strength for a few days, few weeks. I don't expect the bulls to be able to buy here and just be able to buy it up strongly and expect us to go right back up to 6,200. I think we're probably going to stay down around this area some more. And what I put out in the Discord a few days ago, I thought it'd be okay to hold a small position short, with the intent of scaling in higher. So let's just take the close of this bull bar here. So like if you had shorted that close, maybe you would taken like a scalp profit on the following day, or you could hold and sell more higher, like at the moving average or somewhere higher up. And you want to trade small if you're doing this. But you would basically be able to be short and either scalp or hold for lower and scale in higher if the market goes higher, as long as two conditions are not met. So the first condition that would change this is if Trump comes out and says, we're removing all tariffs, trade war is over, free trade is back on, then the market's going to shoot up and you need to get out of your short positions. The second condition, and so I talked about it right here, is, it looks scary that the market has fallen, but the issue is it hasn't fallen sharply. So to me, until it falls sharply, I don't think that the market would have a reason to rally strongly. So what is a sharp fall? Well, something I've found over time from talking to other people and examining it myself is when the VIX hits 35. When the VIX hits 35, a lot of people automatically just start buying around that level. That means that the volatility is very elevated. And usually when you see VIX 35, that means the market has sold off and very rapidly in a short period of time. The VIX during this recent sell-off has not hit 35. I believe 29 was the highest it hit, somewhere in here. And really, until it gets into those mid-30s, then not too many people are really going to be stepping into the market and be buying. Really, 35 is kind of that number where people start to look at it, at least based off of the VIX. That's when people start to look at it as a good level to start buying. So they'd probably buy small with the plan of taking a profit on the next day. And there's lots of cases like that. You can go back and look at the charts, see when the VIX gets above 35, then either the trend will briefly end there, or maybe the next day we'll have a strong rally. So around VIX of 35, that's when the bulls really start to step in, at least momentarily. So those two conditions, we've not seen great movement on tariffs, and the VIX has not gotten too elevated. So I don't see a reason why we couldn't hold short and try to be taking short scalps during this time. You could argue that we're lower in a trading range, and that could definitely be true. But it would still be okay to hold short, hold a small position short, and sell higher, and even sell higher again if needed, because we probably would be in more of a big trading range. It's unlikely that we're in a bull trend right now. I think we're in more of a trading range market where we probably need to test lower before we head higher. So I think it'd be okay to have a small position short and scale in if needed. So those are my thoughts. In a few days, I'll try to get out that video on Peru. I think it's gonna be a really good video. Anyone that's interested in travel trading, being able to use your skills as a trader and basically go anywhere in the world and trade and be able to make your income while being anywhere in the world. This is going to be kind of the first video of that kind on this channel, and I think it's going to be really enlightening or really inspiring for a lot of people. So, keep an eye on that. It'll be out in a few days. That's all I have for now. Thank you guys for watching. It's good to be back. Good to be back just at home and just be able to be settled in. And so yeah, I'll see you guys next time.